Let's get to Bob Pisani. Morning, Bob.
Morning, guys. So another 2 to 3% down day, and it's a takedown of all the sectors, essentially, in that group here. Just let me put up the S&P futures, and I'll show you. Of course, earlier, the close yesterday, we moved up dramatically on hopes that we'd get some kind of clarity on a fiscal stimulus package. That's not so clear anymore, and that's why we moved down the pre-open and why we're down today. If you take a look at what moves the markets here, obviously we had what was going on Monday with the oil moves here, the coronavirus headlines. But again, I think the most important thing is the perceptions of fiscal stimulus. What's the content? What's the size? What's the timing? When it gets clearer, market tends to stabilize and move up. When it's more murky, as it was overnight, the market tends to move to the downside. Look at the sectors here. And while you might say, well, all right, oil stocks are down a little bit more, essentially, again, you see this global takedown. I keep talking about it. 2 to 3% of the whole market is down. Even healthcare stocks are down within a percent or so of where everything else is trading. So this is just, again, continuing takedowns of the multiples. If you look at energy stocks, still no bottom here. Occidental, of course, cut their dividend yesterday. You see these dramatic declines here. Bank stocks, they're getting really cheap here. Some of these stocks meet regions probably 7 to 8 times forward earnings. Some of these are also PNCs, probably 9 times forward earnings. Again, people don't believe the earnings. That's the problem. These multiples, book value doesn't necessarily mean an awful lot when you're not sure of what the business is going to be like in the next couple of months. Hilton lowered, essentially removed guidance. This is joining the growing list of companies here that have essentially withdrawn their guidance. That's up there. There's Hilton recently, but you see this growing list that we've got. So these typical metrics we use to try to figure out where is the market bottom don't really work here, like dramatically oversold internal indicators, 90% downside days. So a lot of people will look at what's the maximum drawdown we see in an extreme situation, a recession, for example. So the S&P will typically drop about 13% from its high to low in any given year. Right now, we're down 17%. So already the drawdown from high to low is a little higher than normal. Recession numbers, it's typical for the S&P to drop around 30% in recession. Now, in the Great Recession, 10 years ago, it dropped 50%. That is a real historic outlier. We're not going there yet, but there's a typical range. If you're trying to figure out, gee, what could we expect? Well, there's another 10% if you get down towards recession territory. Nobody's saying we're there yet, but this is what you want to think about in terms of a model. A lot of people are very happy with the fact that technology, which is sort of the emotional heart of the market, with the S&P, down 16% or so, technology is held up very well. It's not getting cut bigger than everything else. It's really energy and banks that are being cut. Of course, a lot of people could say that may be the next shoe to drop if we have continuing legs down. But right now, technology comparatively is holding up pretty well. If you take a look here at the volumes here, boy, are people busy. Down here, New York Stock Exchange has been huge. This is the cash equities for the whole stock market, everything, NYSE, NASDAQ, everything. 14 billion shares we are averaging per day. The average last year was 7 billion. We're doing twice the normal volume in cash equities on the overall exchanges. And the futures exchanges, CME is having one of the greatest months in its entire history. We look at futures contracts here. It should be contracts, 41.4 million and 19.2. You see, again, twice as many. These are contracts, again, that we're dealing with, not shares here, as there normally is. So at least, is there any good news here? At least somebody is making money off of this sad state of affairs. Everybody down here, very, very busy.